got a lot of great questions coming in, right? It's Friday the 13th. Maybe we get some spooky ones as well. We are now answering your questions. First up, Sam in Minneapolis. Oh, you know. Asks if you should buy Ulta. The stock is down 33% in the last month, Joe. Is Ulta now a rebuy for Sam?
Are we really asking me that question after last week I revealed on the show how poorly, the performance was after earnings? Obviously, that was a very discouraging P&L for me at the end of the day when I was getting out 28% lower, and I said I wouldn't talk about this name again. This name is broken. This name disappointed me. It is broken. It disappointed me. It is a name that I don't want to talk about.
This is where Josh chimes in and goes, are you kidding me? This has been one of the best stocks in the world in the last decade.
No. Down 28%. It hasn't even bounced.
Is that your impression of my voice? Let me, hold on.
No touch.
First of all, I don't sound like that.
I don't.
Wait, you're doing one too, Muscle Milk?
First of all, I don't sound like that. That's the first thing.
Muscle Milk. He's not, he does.
Wait, did you just give me a lisp?
No. Anyway, no one's.
Dude, all right.
No, nobody. We're not. Nobody said.
Sully, I love you too. You're great. I don't care what they all say about your ears.
I know.
The police called the pawn shop you robbed wants the jewelry back.
No, I was talking about how you're jumping in on the Amex thing. How it's been a great stock for a long time. It's been weak lately, and you killed me for saying that it was weak in the short term.
Ulta had been a great stock.
And you agree that it's broken?
I'll tell you something even worse. The technicals got you into it right before they shocked the market. That happens. Yeah. Sometimes you're in a great stock. It's a momentum name. Earnings are growing. And then they shock you with a decelerating quarter of sales. And look, everyone rethinks the stock. You get a massive gap down. I think Joe said the right thing in the wake of that, which is, no, I'm not buying it here. I understand that it's now cheaper, but things have changed. I think that was the right guidance he gave people.
Do you think you guys are spending too much time together?
Who?
The three of you.
No. John and Kelly can never spend too much time together. John in California says,
we're family.
This is good stuff. You got to break. That's what you do. You break chops, right? That's what they say. All right. John in California, my home state, says that Newell Brands has had a nice run up lately. Do you buy, sell, or hold Newell, the Sharpie maker, Josh?
Yeah. So I don't know this company fundamentally, but I did take a look at the technicals. Stock has a huge gap from February 2019. It looks like it's about to fight to get back into that gap. If you're technically inclined and you're looking at this as a trade, then what you want to see is what happens at the top of that gap, which we're not there yet. I think that's kind of like a moment in truth. It could be snapping this downtrend. It could. So I know it's counterintuitive to say, here's an $18, $19 stock. I'd rather own it at 21. But that is the reality here. You want to see if it can get back above where that gap took place. If not, you could be in a frustrating situation.
Okay. Next up, a question on Macy's. Michael in Connecticut wants to know if this is a good buy at this point, Shannon.
Well, we've seen a little bit of strength near term in Macy's, and that's essentially been on what Joe was talking about earlier, improving consumer data. This company has low operating margin, low free cash flow. It's operating in an environment that continues to come under pressure from a number of different directions. And so despite the fact that we've seen some relative value in it more recently, I wouldn't be a buyer here.
Okay, not a buyer. There you go. Straight answer. All right, Randall in San Diego, founded by the Germans in 1909. Asks if you should sell Chewy before earnings next week. John.
I would not be selling Chewy ahead of that. I saw Lone Pine put this on their list. I know Tiger Global has put it on their list. Doesn't mean they haven't traded out of it, guys. We all know how 13Ds work. But nonetheless, I like it here right around the $30 level. I would hold it into earnings.
Okay. And finally, Daniel in Aiken, South Carolina says, does it make any sense to buy into both consumer discretionary and consumer staples at the same time, Rob? In other words, just go long the American consumer, everything.
I think that's where the strength is. So we agree with that. We're overweight both those sectors within our U.S. neutral. It's the points that John was making earlier on the show as it relates to consumer discretionary. You have strong labor, low debt service cost, low mortgage rates, and so I think there's some fundamental support there. And then within the staple side, you have a defensive characteristic, you have growth improving, and a focus on operational efficiency. So with valuations being reasonable, I think you can own both.